That breaking news comes from Wall Street, where the stock market comes back from its biggest fire sale of the new year so far. At one point today, the Dow had tumbled 565 points. Then a rally began, but the Dow still finished the day down 249 points. The NASDAQ, as you saw, slipped 5 points, and the S&P 500 dropped 22.
Despite that rebound, the markets remain deeply in the red due to worries over slowing international economies and tanking oil prices. The Dow is off nearly 1,600 points since the first trading day of the new year.
A local financial expert will give us his take on what this means to you. But first, Channel 4's Kamasi Aaron is joining us live from a gas station on Beach Boulevard, which has some of the lowest prices in town. Kumasi?
Well, Tom, it's actually really low here. Check out this price, $1.64 for a gallon of regular gas here, and that's actually lower than the average for our area, according to AAA. And while there's plenty of reason to be happy about this, we see a line of people coming in right now. There are some other effects of these low gas prices that a lot of people just are not aware of. 164, 165. Gas prices are low. It has a lot of drivers in our area pretty excited. But John Blunt's feelings are mixed.
Well, I enjoy the gas prices being lower. It doesn't cost me nearly as much to fill up my truck, but the price of oil being below $30 a barrel on a global market is somewhat concerning.
Overnight, the price for a barrel of crude oil dropped to $28, the lowest it's been since 2003. And the reason why Blunt and others are so concerned about it is because it's prompted a sell-off on Wall Street, and energy companies have been hit the worst.
The unfortunate thing, either if you don't have those particular investments inside your portfolio, you're affected. There's really been no place for a person to hide.
Titus Pittman of Genesis Financial Partners has been helping guide clients through this rough financial ride. He says the global energy and oil sector is down about 60%, which not only can affect a personal investment portfolio, but the energy companies themselves and the people who work for them.
Some of the businesses may even tighten up what they're doing from a hiring perspective. If they had a forecast to hire future employees, they may put that on hold. Also, some companies may even look at laying off some people, and it's really unfortunate.
So what can you do? Pittman believes the price of oil and in turn the market will eventually rise again. So he advises his clients to wait it out.
Look at your overall investment objective. If you don't have a need for cash immediately over the next 12 to 18 months, look at this as an opportunity to hold your positions, reflect on your overall investment objective, and if your time horizon is longer, then I would say stay the course.
Blunt says he'll be waiting and watching.
That's all we can do is watch and be aware of what's happening globally, and I trust the Lord.
Now, I spoke with the Consumer Energy Alliance, and they told me that consumers should really take advantage of these lower prices, and if you look out here, you can tell people are definitely doing that. The organization says oil prices fluctuating is something that is to be expected, and they also believe that the energy companies will be resilient. Kamasi Aaron, Channel 4, the local station.
Thank you, Kamasi. Joining us now to offer some analysis of the market's turmoil is Joe Krier, financial planner with Krier Wealth Management.
Joe, you heard what Titus Pittman just said about oil prices, which are thrilling drivers, of course. What is it, though, about falling oil prices that prompts an investor to dump their Apple or Netflix stock?
Yeah, good question, Mary. I mean, there's a mixture of things here. One of the main things is when oil drops as far as it has from the highs, that people are worried it's predicting a global slowdown. And if the global economy slows down, there's less revenue for corporate America, and therefore less iPhones being sold or less movies being rented, and it kind of spreads across the spectrum. So for now, it's just the good news that you had reported on a minute ago, but the bad news hasn't really found its way through yet.
Joe, at one point today, one index, the S&P, had fallen to its lowest point in 2 years. Should the average investor have sold their stock before all this began, and is it too late to sell?
Another good question, Tom, and it's very hard to pick market tops here as we go along, and panicking in the middle of something like this is another big mistake that gets made. You know, we see days like today, which we refer to as capitulation, where large institutions are dumping anything they can sell. They think they can get a half-decent price, and that's the time for the retail investor to step out of the way, let cooler heads prevail, and then make a decision.
Joe, there are predictions out there that this, what would you call it, collapse of stock prices will continue all year. Is that extreme in your opinion?
I think it is. You know, what we've seen over the last 10 or 15 years is that when markets correct, they do so rapidly. They get all the bad news out of the way, and the best cure for low prices is, in fact, low prices. there's a point where institutions start looking at stock prices and they can't help themselves but to start and nibble. And, you know, things like healthcare, grocery stores, you know, necessity type items, they're always going to be there. We're always going to turn the lights on. So there's always going to be buyers for those type of investments.
Joe Krier, thank you very much for your analysis. Appreciate you coming into our newsroom.